Welcome back to Alpha Recap, your aftermarket download from stockalpha.ai. We closed the trading day and we're here to break it down. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. So what really stands out here is the sense of cautious upside. Not a blockbuster rally, but some steady rotation under the surface.
Exactly. The S&P 500 finished the day up about 0.25%. The Nasdaq 100 finished up just under 0.3%. And the Russell 2000, our small cap benchmark, led the way, up about 0.4%.
Small caps pulling ahead. That was the headline, even though the moves were modest.
Right. The tape felt like a tug of war between cautious risk-seeking and headline-driven positioning. People were rotating out of big consensus megacaps into cyclical and policy-sensitive pockets.
I mean, when you step back and look at this, it wasn't a broad risk-on day, so much as selective bets. Cannabis, utilities, some real estate, energy plays tied to storage and renewables, plus the usual AI flows.
Yes, and that selective nature showed up across sectors. Utilities and real estate had pockets of strength as yield-sensitive flows rotated in. Materials and industrials picked up on stronger activity signals, and energy got a bump from storage dynamics and transition spending.
Right. And the other thing is, tech didn't crumble. The Nasdaq outperformed the S&P 500, which suggested investors still wanted growth exposure, especially around AI names.
And to pass that, this was not a tech-led broad surge. It was measured. Nvidia stayed in focus as the poster child for AI infrastructure, keeping a bid under related software and chip suppliers.
So a little bit of everything. Beats and raises and smaller names kept mid-cap volatility alive too. The market kept rewarding companies that delivered upside and then raised guidance.
Let's walk through the main drivers we flagged. Rotation out of mega-cap consensus positions, headline waves, cannabis, AI, media regulation, and ongoing caution about the Fed's path and Powell's policy legacy.
Yep. On the Fed front, it felt like investors were still debating timing and magnitude of any easing. With inflation nearer the Fed's target than a year ago, people were parsing labor and services inflation prints to guess the pace of easing.
Analysts noted that Fed messaging really still set the medium-term framework. If yields were to stay stable or drift lower, that was supportive for utilities and REITs. If yields rose, cyclicals and value could outperform. Simple but true.
Honestly, I was a bit surprised by the calmness, given all the headlines popping up. But the calmness was selective.
Let's hit sector by sector. Cannabis was a clear mover. Rescheduling momentum drove optimism that federal policy could ease, and names tied to cultivation, retail, and ancillary services caught a fresh bid.
That was quite the comeback story today. Traders priced incremental policy optionality, which, for a sector that's been beaten up, felt meaningful, even if it was just sentiment-driven.
Communications and media were noisy. FCC action and commentary about political motivations created volatility in legacy media stocks. That regulatory noise prompted some traders to rotate exposure within that sector.
Utilities had a nice moment. People rotated into yield-sensitive names on the idea of stable cash flows and clean energy capex tied to grid upgrades.
Materials and mining saw a modest rebound, linked to stronger industrial activity indicators and demand expectations for manufacturing and construction. That helped the small-cap leadership storyline as well.
Real estate, especially selective REITs, showed strength too, as investors hunted for yield and reopening-related leasing upside. Again, selective. Not every REIT rallied, but pockets did.
Industrials and manufacturing had a handful of names rallying on company updates and data suggesting steadier demand. That fed into the small-cap outperformance you mentioned earlier.
Energy gained on storage and renewables themes. Midstream storage and some renewable equipment suppliers were notable outperformers as positioning tilted toward transition spending.
Healthcare was mixed. AI healthcare crossovers brought attention to clinical tech names, while larger pharma names were being watched after corporate updates.
And crypto-linked equities still drew flows. So you had the AI and crypto buckets both pulling some attention, a combo of momentum and structural narratives.
Let's call out a few individual moves. Nvidia continued to sit at the center of AI optimism. Commentary about its strategic bets across the AI stack reinforced its leadership narrative.
Yeah, NVIDIA remained a major market mover whenever incremental AI adoption news surfaced. Even measured moves by NVIDIA tend to ripple across related names.
Procter & Gamble was referenced for longer-term price weakness, down roughly 9% over 3 months. And analysts were discussing margin dynamics and operational responses.
That multi-month slide had consumer staples under a valuation microscope. It reminded traders that even defensive sectors can show stress if margins slip.
United Parks & Resorts reported a GAAP earnings per share miss, which pressured the stock and underscored how discretionary and leisure operators can surprise on costs or attendance.
Ouch. That one highlighted the sensitivity of leisure names to foot traffic and mix. Not great for the company today.
Disney and other communications names were choppy due to the regulatory headlines we mentioned earlier. That made the media group a headline-driven rollercoaster.
Cannabis names, think Tilray and Curaleaf among peers, reacted favorably to the rescheduling chatter, lifting that whole specialty consumer complex for a bit.
And an interesting cross-theme, AI in healthcare. Coverage pointing to AI reshaping clinical care, billing, and workflows pushed several healthcare tech names higher as the market rewarded commercialization prospects.
Beat and raise stories continued to matter. Smaller names that beat estimates and raised guidance saw outsized moves. That kept mid-cap growth volatile and attention-grabbing.
From a technical and market structure perspective, the posture was constructive but cautious. Positive breadth, small cap strength, NASDAQ outperformance, all pointed to a staged, selective risk-on stance rather than a broad breakout.
Options flow still showed hedging around key index levels. Traders were balancing upside exposure with protection in case of a macro or geopolitical surprise.
Historically, today's low volatility, headline-driven rotation felt familiar. Mid-cycle dynamics, where investors reallocated without a decisive trend change. Buyers of long-term themes like AI and renewables coexisted with tactical yield plays.
Short reaction.
Longer reaction.
Mm-hmm.
Looking ahead, things to watch for the next session included 4 main areas. Companies that could deliver beat and raise results, Fed speakers and policy signals, whether sector rotation continued to favor small caps and cyclicals, and regulatory headlines around media and cannabis.
Also, technical levels and liquidity. Option implied levels and intraday liquidity can amplify moves in mid and small cap names, so traders were keeping an eye on that.
Quick recap of the bottom line. The market on this day balanced optimism and caution. The S&P 500 was up about 0.25%. The Nasdaq 100 was up just under 0.3%. And the Russell 2000 led at about 0.4%.
Sector level stories. Cannabis rescheduling momentum. AI influence on chips and software. And regulatory noise in media set the tone. Active selection and risk management were still front and center.
Analysts noted that this environment favored selective positioning. Long-term thematic buyers for AI and renewables, tactical rotating into yield-sensitive sectors, and careful hedging because policy and earnings dispersion remained risk factors.
So, the practical takeaway. Expect more headline-driven rotation unless a clear macro catalyst showed up. Traders and investors seemed hedged and ready for either a policy surprise or stronger than expected earnings.
Before we sign off, a reminder. This discussion is informational only. It's not personalized investment advice, and it doesn't recommend buying or selling any specific security. Analysts note that market conditions can change quickly.
Short takeaways?
1. Market moved modestly higher on selective rotation, not a broad breakout. 2. Small caps led, suggesting some confidence in domestic cyclical demand. 3. AI and cannabis headlines continued to drive pockets of the market, while Fed messaging and Powell's legacy stayed central to the narrative.
And 4. Stay mindful of liquidity and hedging. The market showed positive breadth, but participants remained cautious.
That wraps our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap.